Our next guest says this is a breakout quarter for Facebook. He's David Garrity, a principal at GVA Research. So, David, how do you feel about Facebook tonight? Is this a stock that you would buy, sell, or hold?
I think if the stock stays up 20% as it is as we go into the market tomorrow, target price I'd have for Facebook out 12 months is about $35 a share. The stock's trading at 31. Certainly, it would continue to be attractive, but I think that there's some other names that might be even more so.
How surprised were you, David, at the numbers they posted today?
Very positively surprised. The biggest surprise was the percentage of advertising revenue that was coming from mobile. Expectations had been it would be about 33%, and to have it come in at 41% certainly shows a very significant adoption over the last 3 months. Obviously, we'd have to be concerned as to what extent we see that number moving higher than 50%, and what does that mean in terms of the company getting less per ad than they would traditionally off of their desktop product.
All right, so it looks like things were working in this quarter. What does Mark Zuckerberg and the company have to do now?
Well, what the company has to do is to, one, I mean, they've spent a lot of money in terms of buying this company, Instagram, which they paid about $1 billion for, and is a company that didn't have any revenue. Clearly, they have to show shareholders that they can successfully monetize this billion-dollar investment in this company. How they plan to do that clearly is a very open question, and something I think that investors are going to want to hear more about from management, not just in terms of today's conference call, but going forward.
If I were to sort of surmise from what you said a moment ago, you like Facebook, you don't love it. There are other companies that you like more and maybe love. Why is that? What is holding you back on Facebook? And what makes you like some of the others more?
Overall, first and foremost, looking at the valuation. I mean, we've had a very nice acceleration here in terms of this revenue growth. We are seeing some of that pass through to the bottom line. Arguably, EPS, though, isn't growing at the same rate year over year that revenues are. But the valuation on the stock is still fairly stretched. If we look at some other large technology-oriented names, whether it's an Apple or a Google, growth rates aren't too much less than they are Facebook, but the multiples are much less demanding.
David, I know you're bullish on Apple. If you had to choose one, Apple or Facebook, which would it be?
I would take Apple over the next 6 months.
But Apple's profits were down year over year yesterday, David, so it really isn't growing, is it?
Well, what we're looking at now is going into the second half of the year. You're going into a period of time where Apple's going to be introducing new products. Margins are going to expand. Obviously, prior year comparisons are going to be easier, so you're going to see a return in terms of profit growth. The other advantage you're getting in terms of Apple is just, much less demanding valuation. Also, at the same time, with respect to Apple, you're also getting a not insignificant dividend, whereas you don't get that with Facebook.
Okay, great stuff, David, as always. Thank you so much. David Garrity of GVA Research.